Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We are talking about this kind of backdrop of risk today that did enter in, and it was very interesting because you know how I feel about this Powell rumor of him getting booted. I don't agree it's going to actually work. Nonetheless, though, it did trigger a very big dollar dump and gold spike. Equities recovered from their fall after Trump basically came through and negated the headline saying, no, it's not true. But the damage had already been done for some of the zero DTE folks, I think. Nonetheless, swing traders are fine, trend traders are fine. It was a hiccup. Anything happened in your particular trading today that might have interrupted the apple cart because of this headline risk?
And that's the problem when you get very low volatility environments. Even though the VIX is kind of sitting in there a little bit, as we talked a little bit about last week, we did pull back a little bit on the S&P, but as long as we start hinting at making new highs, I think the VIX sort of takes notice in a way, which is the potential for more of that melt up that you've been talking about in your notes as well. The melt up to the meltdown, but we're in the melt up phase still potentially. And when people are still continuing to sell and press on implied volatility, as I think they have been and will continue to be as we get closer and closer to the August date, I think people sort of see this environment as not really probably doing very much until that sort of fateful day of kicking the can down the road again, probably. But until then, that's the way it's been, either getting the heck out of the way or you are sort of pressing down on volatility to try to harvest those premiums because they represent a little bit of extra yield while you wait. But the problem with that is when volatility is very low, you're short a lot of gamma. So that one single headline has the potential to continue to unravel and cause some damage, and particularly in the world of zero DTE. So those folks who were ready for things to get worse were happy, I'm sure, that Trump came out and assuaged those fears. But that's the reality of being a little bit more aggressive. Some of my fear gauges are really, really starting to tick very low, which makes me a little bit nervous. And I do a series called Volatility Ninja. And in there, I talk about how you have to navigate the environment, particularly as an option harvester, because you are on the wrong side of leverage. So you're benefiting from decay and all that stuff and all the things that income traders like, you know, making money while you sleep, making money during Christmas break. And this is sort of the notion that this is sort of money that just trickles in over time. But the risk is movement. The way that I view it is, well, in a very high volatility environment, you got to be careful. In a very, very low volatility environment, not equally, but you have to be very careful as well, because we get into these environments where realized volatility drops into the single digits as it has lately for the S&P, which means things are not really moving very much at all. And every single little flinch comes back again. So really, we have not seen very much movement apart from that little move up towards 62.50 or whatever it was. And so my preferred area is somewhere in between where you're getting a little bit better premiums and it's a little bit more normalized environment. So I think when things get too quiet, I start to get a little bit worried as well, because it doesn't take much. When you're an option seller, you often use something called a delta, which gives you a strike price that tends to get closer and closer and closer to where the market is when option premiums are very low. So instead of selling 1% out of the money, now suddenly you're selling 50 basis points out of the money. It does not take very much news to get hurt. And that's going to be the reality of it. If a big headline does hit and take hold, it could be a very ugly day, really, which is not something we've experienced for quite a while. But for now, it's a little bit more of the broken record. And it's been a profitable broken record for premium sellers and for longs, because it's just sort of like, well, there's a bid to the market, CTA, vol targeting, not enough people in the market, not enough people allocated. Maybe there's an AI melt up underway. So there's this underlying bid to the market, and we continue to see that. I was thinking about it before our show, and I thought broken records can be very profitable, because I think as traders, sometimes we get this idea that things have to be two-way, and they don't have to be two-way. You can go months where things just go in one direction, and then as we saw in April, you can go months where it's just all hell's breaking loose. So don't think that things necessarily have to get back and forth that much. They can just be very persistently one directional, and that's where I see some people get into trouble. They go, well, we've come so far, I'm going to start shorting this market. I'm going to start buying a whole bunch of puts. Someone reached out to me just a week ago and they said, I'm kind of getting killed. I bought tons and tons of August puts and the market just keeps going up and up and up and up. And they're fighting a trend that is very much entrenched. And so until, you always like to say, we need that trigger, and until we get there, it's just going to be the broken record and more of the same.
Well, let's go over what happened today just with this Powell headline, because I think it is part and parcel for the risk that definitely enters in.
I'm a little surprised we came back from a TLT at
Okay.
84.5.
Let's just show this chart. This is what happened live. Of course, I closed my trading room and we had the headline, sources say from the White House that Trump is going to fire Powell. And immediately you can see this is on a 2-hour. I have this heat map that I show clients during a live trading room. We dumped and gold spiked. Now, the Qs didn't move very much. They really didn't. SPY did soften. So the market obviously reacted to that VIX print, which did spike higher. And I'll show that in a second. Crude, it doesn't really matter in regards to the Powell headline, but yields do. And yields got a little bit hot, but they did not pierce above that 4.5 lever. And that's important. We're not there yet. This is what VIX did. This big old shake and bake. And ironically, it hit 1950 and they sold aggressively. That's a really popular, by the way, level. So this is up there forever on my charts. It's a really strong resistance level historically, 1950. And sure enough, it went up and then it went right back down. And that was the intraday VIX. And lucky or good, I had actually posted, this is a head fake. This, I don't trust it. I don't believe this. And sure enough, Trump came out pretty soon after. It was all kabuki theater. I said, don't fall for it. Literally, I don't believe the rumors. Gold spiked. This is true. And dollar dumped. But that was really the one big tell that we got out of this whole drama in this magic moment, because it will tell us what happens in the future when Trump comes in to disavow himself of the Fed policy not cutting, which is very much the case. It's very likely that Jackson Hole in August, Powell will be very flat lined, if not hawkish. And September, odds are also falling for a rate cut. So it's more likely that when we do get closer to that May 2026 event, which is Powell leaving by his own schedule, that is literally when his term expires, right before that, that's when Trump can kind of try to play this card of demoting him. I personally feel very strongly that Powell's not going to leave and Powell can't get fired, but Powell could be quote unquote demoted, but there is no precedence for that. There is one case, and I got pushback on this, but there is one case where back in 1948, Truman did demote quote unquote the sitting chair, but it was 4 bloody days before his term expired. So that's not really a case. A case is where it can be contested, and there was no ability to contest because he had to step down anyway, naturally, 4 days later. Anyway, long story short, that is definitely what spiked the intraday volatility, and it was volatility. And the only thing that stuck from all of that drama that I just highlighted for you, this bear steepener. So it has been 100 days also. It has been 100 days since this trend line in the E-minis has been broken. This is from Sunday, the 6th into the Monday intraday low, that's SPX 4878, before Trump came in on Wednesday, April 9th and said, okay, we hear you credit markets and bond markets and equity markets. We're going to delay the tariffs 90 days for rest of world. Remember that? And then the rest, as they say, is history. And if you fast forward, we had one tag right here, which was literally, I was on vacation and it was Sunday, Monday into the Iran-Israel de-escalation. So markets were trying to get going to the downside, and then the bunker bombing and theater, and then the market got supported and gapped up on Tuesday. And ever since then, we have stayed above 100 days from that Sunday ES tag to yesterday. And we just broke below it yesterday. Something else happened, which I thought was kind of interesting. I had been talking about NVIDIA going to that 172. It's not really rocket science. It's just a technical trend line. It does not mean the market's just going to roll over because of that. It just means that's typically where we would get some digestion. And then this morning, I loved Jay from Volland's comments, so I incorporated them in my market thoughts to clients, which is right here, similar to what you just said as well. Capped upside. Jason said 6280 is a major inflection point for the August OPEX. Above it, we have a strong move to 6,400. Below it, and there's modest support down to 6,200, and breaking below 6,150 can create quite strong downside. And if I show you E-mini chart again, what do I have right here? That, remember that key level that I had as a price target back in April? I said if we get above, boom, we did. April 23rd, we're going to head up into that 61.27 E-mini price target. We did. And then once we got above it, obviously it's very bullish. But if we do start to stay underneath this trend line and start to break some of these lower levels, we're going to head back to that 61.27 ES, which is very similar to his 61.50, which is strong support until it isn't. There's an air pocket of risk underneath that.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.